Welcome to Get Started Investing. In this podcast, we cover all the basics that you need to start your investing journey. Are you joining us for the very first time, and is this the very start of your investing journey? Well, before you dive into this episode with us, our feed is designed to go from the very beginning. So we strongly recommend you scroll up and start from episode 1. If you're feeling brave and just want to dive in, then don't let us stop you. Here at GSI, we unpack all the jargon and the confusing bits. Hear your investing stories with the goal of making investing less intimidating, and we want to have a good time along the way. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Back for the next chapter in the Get Started Investing story.
Yes.
We've done 3 parts on investing styles. We've interviewed an EQUITYMATES community member, talked about investing styles. Now we're on to the next chapter. This book keeps getting written. And we're going to be doing the next few episodes focusing on assets. Welcome back to school. We're going to asset class.
We're going to asset class. There are many different assets that we can invest in, and the good news is a lot of it can be done through the share market, which we're going to touch on today. But just before we do, we want to let you know about a pretty good opportunity. If you're in Sydney for a live event, if you're in Western Australia, Queensland or Victoria for a streamed event, and that is the Australian Shareholders Association Investors Conference. It's a pretty awesome opportunity to get to see some of the brightest and smartest business leaders in Australia. You're going to have the chairman of BHP, Telstra, Woolworths, plus CEOs from Fortescue, Origin, you name it. There are going to be plenty of bigwigs in the room, and you have the opportunity to go and watch them speak. It is on the 31st of May through to the 1st of June, 2 days over the weekend. Here in Sydney, it's at the Hilton and is streamed live to some hotels in the other states. The best news is that because we have a good relationship with the ASA, they're offering the first 50 EQUITYMATES a very special deal on tickets. So Alec and I would love to be there. Unfortunately, it's my 30th.
And you're dragging us away for a week.
So we can't make it, but we will endeavour to get there next year. The website is australianshareholders.com/EQUITYMATES. That's australianshareholders.com/EQUITYMATES to get some good value tickets, and also a free membership for a year to the Australian Shareholders Association, which again is going to be pretty valuable to you if you're pretty serious about investing. So head over there and check it out.
It's pretty rare that you get to look a CEO or a chairman of an ASX 200, chairman or chairwoman of an ASX 200 board in the eye and ask them a question.
Yes, it is rare.
Yeah.
And this is a great opportunity.
Make sure you have some curly ones.
Yes.
Like Gordon Cairns from Woolworths is going to be there.
Yeah, pokies.
Ask him about poker machines.
He'll say we're trying to get rid of them.
True.
Anyway, that's the housekeeping for today. It is time to get stuck into asset class. Ren's going to be your teacher today. I'm the student. No?
I don't know. I was just going to say where you're going to go with that.
I went nowhere. All right. So
yeah, we the last chapter we spoke about how you invest, figuring out what the right style is based on your temperament, based on your interest, based on how much time you can commit, all of that stuff. So if that's the how, this is then the what, the what you're actually going to buy. Let's start with some definitions. What is an asset?
An asset is any resource that can be owned or controlled and has economic value. Like you, Ren, you're an asset. Everything from your house to your car to a business's intellectual property. These are all assets. Anything that you can really derive value from.
Yes. Yeah. So anything that you can own or control is element 1, and anything that has economic value is element 2.
Yes. Is an umbrella an asset?
Yeah.
On a rainy day?
Well, it's definitely an asset. If you can sell it, it's an asset.
Jeez, wow.
Is it a good investment?
On a rainy day.
On a rainy day. We're just talking about this because Bryce got stung with a triple surge Uber fare because it's raining in Sydney, and yeah,
unbelievable. So
there'll be a lot of rain chat in this episode.
They will. So that's an asset, Ren. But when it comes to investing, you might have heard about people saying, have you thought about which asset class you're going to be investing in, or have you thought about how you're going to build a portfolio with different asset classes? Do you want to give us the definition for an asset class?
Yeah, an asset class is just a group of assets that all share the same characteristics. So property is an asset class, and then every different type of property is an asset. You know, everything from residential property to office buildings to warehouses to farmland, like that can all just be grouped together under property. Or, you know, currencies is an asset class, and then the assets are Australian dollar, US dollar, Japanese yen. You get the point.
Yes.
So yeah, it's just like it's a broader term. It's the parent term, the category term.
Yeah, and I think what you mentioned there is the characteristics is the key point when it comes to thinking about asset classes. And later on in the next episode, we'll take a bit of a deep dive on some of the key characteristics for the asset classes that we're going to go through today and how you might be able to build a portfolio of different asset classes. So, Ren, there are plenty of assets out there in the world.
There are.
But there are some that are considered to be your major asset classes that a lot of investors, professional investors and retail, have the opportunity to build and invest in. I think a lot of the time when we go through each of these, it'd be good to have a bit of a quick discussion around the risk profile, because a lot of the time beginners base their investment decisions, I feel, around like perceived risk of certain asset classes. So, for example, I'm not going to start investing in shares because they're perceived to be risky. Property, safe as houses. Do you know what I mean?
True. Maybe we need to introduce a common phrase like safe as houses for shares, secure as shares, and then maybe people will start thinking that it's safe.
Yeah, let's start that movement. But
Big Property have done really well with that saying over the years.
They have done very well. So we're going to discuss some of the major assets and maybe give a bit of commentary on how we think about their risk. And I'm not going to say maybe just a 1 out of 10 or whatever it may be.
No, let's not give out of 10 ratings. Let's just talk about it.
Sure.
Or you can give it out of 10 rating. I think the starting point here has to be, though, that every asset we're talking about here is investable through the share market. It's one of the more common misconceptions that you can only buy shares in the share market, but you can access any type of asset through the share market. If an asset has value and investors see a way to capture some of that value, there will be a fund or an ETF or a different product that will try and give you access to that as investors. So in some ways it shouldn't be called the share market. It should be called the
asset market,
investing market,
the liquid asset market. And we're gonna
the point of that being that if you're like, why the hell are these boys talking about property and currencies and commodities? We can't invest in those. You can.
Think again.
And
we're going to show you how at the end of this episode. Well, let's start with one of the most common asset classes that I think everyone would have, and that is cash and currencies, or the foreign exchange.
Right. Let's not worry about that.
That's a pardon the jargon.
Okay. Well, I mean, look, if your definition of assets are they can be owned or controlled and they have value, then the money we have in our pockets is definitely both of those things. So the Australian dollar has value and we can own it. Same with every other currency around the world. And over time, currencies, not over time, every day currencies get more or less valuable against each other. The currency's values are constantly moving, and so you can invest in that change. But money is an asset.
Yeah,
that's the kind of insight you come to EQUITYMATES and get started investing.
Money is an asset. To give you an indication of the size of the market when it comes to cash and currencies, a whopping $6.6 trillion exchanges hands on the forex or the foreign exchange market every day, which is pretty phenomenal.
That is phenomenal.
Huge amounts of money are changing hands. People are investing and trading and trying to make a profit on the Australian dollar versus the US dollar, or the US versus the yuan. It's incredible.
Yeah. Well, to be clear, because you often think like, what value are these people adding to society? Just trading, basis points here and there of these different currencies. foreign exchange markets actually do have a really important function for businesses to like hedge their foreign currency risk and to enable international trade and all of that stuff. And that falls into that 6.6 trillion as well.
Yeah.
All of global trade falls into that number.
Yeah. I mean, it's a pretty phenomenal number.
I got a question for you. How many currencies are there in the world?
There would be 120.
No, 180.
Ooh.
Yeah.
It's almost, okay. I was going to say 182, but then I thought that a lot of countries may be using the dollar exclusively.
Yeah.
But
Here's
which two countries don't have their own currency?
No, there's more than 182 countries in the world. I think there's 196 at last
count.
Honestly, there's probably even more now. This is just a random off the topic thought, but you know how in Pokemon it was like the whole thing was you got to capture all 150 Pokemon?
No.
Well, that was like the game in Pokemon. Like you catch all of them, got to catch them all. That was the tagline. Maybe we should make an EQUITYMATES game. Got to own them all and see who the first person to own a bit of all 180 currencies are. And like there would be some easy ones, but there would be some tough ones in there, I reckon.
There would be. Surely there's a market that it provides access to.
I reckon once you get into like the 170s, you probably got to be boots on the ground in some of these countries.
All right, so cash and currencies, huge asset class. And when we speak about asset class, we're talking about all those 180 currencies, all wrapped in one. How do you think about risk when it comes to cash and currency?
Oh, I think
from a beginner investor point of view.
Good. No, I think look, the Australian dollar, the US dollar, you're pretty safe. You know, there'll be Bitcoin people listening to this that will be telling me that I'm wrong. But look, it's backed by strong governments with strong economies, and you're relatively safe. If you ask someone in Venezuela or Argentina how you thought about cash and currencies as an asset, they would have a very different answer. So currency is it's relatively stable in where we are and where a lot of our listeners are listening, but that's not a universal thing.
Yeah.
I
would say though as well that if you're trying to trade currencies to make money, there are a lot of factors that you need to consider.
If you're not a professional or you don't have access to professional level computing power and stuff like that, you're fighting algorithms that are quicker,
smarter,
able to like suck in more information more quickly, and like sure, you can make money. If you're talking about the risk of trying to make money forex trading, then very high.
Yeah.
All
right. So the second asset class that you'll often hear about is commodities.
So I'm just confused by the order of this. Are we not talking about stocks?
Yeah.
Oh, you're just getting to them.
Yeah.
So not in order of priority.
No, not in order of priority.
Alphabetical order?
There is no order.
All right, commodities. Talk to me about it.
Commodities, otherwise known as raw materials, really. They're inputs that are used in the production of other goods and services. So if you think about, the top 10 most traded commodities in the world, you've got crude oil, raw material, coffee, natural gas, gold, silver, sugar, corn, wheat, cotton. You get the vibe. It's all those raw materials that are then traded on and either refined or included in the process of producing other goods and services. And people can invest in them and people trade them, and it's a pretty big market as well.
So I think the key thing when you're thinking about commodities and how they're different from other traded goods is that they are just standard, and there are multiple people creating them, be it drilling them from the ground or growing them or whatever, but they're commodities, they're replaceable, they're interchangeable. Corn from Iowa in the US is much the same as corn from Darwin in Australia is much the same as corn from Russia. It's corn. And so you see that there's just an international commodity price that everyone sort of trades around the world based on. Some, like oil, has a few different benchmark prices, but yeah, commodities are just interchangeable goods, and you just have a global price in many cases. You have a global price for sugar, for gold, and you as an investor can say, well, I think gold is going to get more valuable because there will be less supply or there'll be more demand. Same with corn. I think Iowa corn growers are going to lose subsidies from the Biden administration, and there'll be heaps less corn grown, and that means the price will go up. So you're literally just investing in something that is just, it has a universal price, is replaceable, and you're really just thinking about supply and demand.
Yeah. So the size of the gold market, if we continue on that trend, it's a $10 trillion market. That might sound massive, but wait till we get to some of the other asset classes in the world. But still pretty sizable market for gold. And kind of backing off what you were just saying there, Ren, around, it's really just a universal price. For me, the risk with commodities are they're very cyclical.
So a lot of people talk about commodities being cyclical, and it's probably worth explaining just why that is the case, because a lot of financial industry people will just take it as a given. The reason that commodities are cyclical is because the cost to produce these things is generally fixed, like the cost to drill oil out of the ground or the cost to grow a acre of corn. It's generally fixed. That cost doesn't move much, but prices move as demand changes. And so when prices are really high, heaps of people are like, oh, it makes sense to drill more or to grow more corn because prices are fixed and I can sell it for a really high price. So heaps more people go into the market, which increases supply, and then prices drop. When prices drop, people are like, it doesn't make sense to drill. It doesn't make sense to grow corn. So they stop, supply shrinks, and then prices go up again. And so that's why they generally move in cycles. It's all about like the amount of people drilling or growing or anything.
Yeah, it's also about the demand side though.
It is.
There's, for example, if you look at the iron ore price at the moment, it's being driven by demand from China, not because there's more people, not because there's less people.
But what you'll see is that all of these marginal projects start coming online. More and more people are coming online. At some point, demand will shift, but at some point, demand will slow, there'll be too much supply, and then we'll see the prices go down the other side.
Yeah, so it's a demand-supply game.
Yeah. Well, I mean, we can start talking about the intricacies of demand, but I think the easiest way to conceptualize it is on the supply side.
So let's move to government and company debt is another asset that you can invest in.
Yes.
Really otherwise known as probably the most common term that you would have heard for these is bonds. What this asset class is really giving you the ability to loan money to government or private companies, and in return they'll pay back that money over a set period of time with interest. These can all be traded and sold as an investment, but generally speaking, if the Australian government wants to raise some money to build new roads or infrastructure projects, they'll go to the market and say, we need to raise $1 billion, and they'll sell government bonds to do that. And you can buy those bonds and then have a very, very secure investment that will pay you interest over a period of time. Yeah.
I mean, the easiest way to conceptualize bonds is think about when you go to the bank and you get a mortgage. This is the government going to the market and doing the same thing, getting money up front and agreeing to pay interest and pay it back.
Pretty simple.
Yeah.
Sounds simple, sounds great. It's actually really hard to get access to bonds as a retail investor. You need a lot of money.
Yeah. Well, no one, honestly, like the market is not set up for retail investors. Now more and more people are trying to get involved, but the market was set up for governments and big companies to sell it to banks.
Yeah. So as we said, commodities, the gold had a $10 trillion market. Bonds just blow that out of the park. Worldwide, the bond market is worth $119 trillion. The US alone takes 46 trillion of that. So it's a huge market, and enormous amounts of money are invested and traded. From a risk point of view, given that it's backed by some of the I guess, most powerful governments in the world, or some of the most, powerful and biggest companies, these are considered very secure investments. In fact, they're so secure that they're almost classified as risk-free.
Yeah. Well, essentially, for the US government to default on a US government bond,
The world's in trouble.
we've got much bigger issues
Yeah.
than your investment portfolio. Like the world financial system will be in serious strife.
Yeah.
And there are riskier bonds. Let's not say that all bonds are created equal. Like US government bonds are probably the safest in the world. Then you got up the risk to other governments, up the risk curve to big companies. Then you start, as you get into like weaker and weaker companies, you start getting into what are known as junk bonds. And they can be pretty risky, and people have made a lot of money trading them. But on the whole, for a bond not to pay you back, a government or a company is going to have to go bankrupt.
Yeah, very unlikely. So then we have property. We can't forget property, particularly here in Australia. I would suggest that it is the most loved asset class here in Australia.
Yes.
Property is property. I don't think we need to explain too much about that. But as you said at the start, it is broader than just residential. You've got commercial property. You've got farmland and the
go outside, look at some buildings.
Yeah,
that's all property. Yeah, it's land. It's everything.
Yeah. It's a $5.5 trillion market here in Australia, which is just for residential alone. So pretty massive, which sort of dwarfs the size of our share market, which is not surprising. $36 trillion market over in the US. So pretty massive.
Yeah, which is interesting because that's 7 times, rough. They have heaps more than 7 times our population. So on a per capita basis,
they've also got some very cheap houses.
They do. Do.
In terms of risk profile, I think people, as we said at the start, think that property is
safe as
houses. And I mean, look, yes, you would be right to think that house prices only go up if you read the news every day here in Australia.
Yeah, but you would not be right to think that. Let's be clear.
Yeah, but you would not be right to think that properly. And it's if someone was to show you the price fluctuation of your house day to day, I'm sure people would think of it a little bit differently.
Yeah, well, I just think that we have grown up in a world of ever reducing interest rates.
Yeah.
And the biggest determinant of house prices is interest rates, because if the bank is giving you your mortgage at a lower and lower interest rate, you can afford to get more and more. You can afford to borrow more and more, which pushes prices up because everyone can borrow more. So that's been the secular trend, I guess, the tailwind that has really propped up the property market. What happens if interest rates turn is the question. Look, property's not unsafe. And the thing is, you can always live in your house, even if you're underwater on it. You probably don't want to, though.
No, it'd be painful.
But, yeah, I property is seen as safe. It is a relatively safe investment. But interest rates. Do not go blindly into property. Well, don't go blindly into anything, but just be aware of where we are in a potential, multi-decade interest rate cycle.
Yeah.
One thing that I always want to stress with property, because everyone is like, property is so expensive, you can't access it, which is true. Like, if you want to buy a house, it's years of saving, or, if you're lucky enough to marry someone or have rich parents, which is, it would be nice. But for the majority of people, it's just you're locked out until you're in your 30s.
Yeah.
Except
Pardon me.
Except on the share market, you can buy REITs.
Yes, which we will touch on in a second.
Okay. Am I jumping the gun here?
Well, yes, you can. I mean, as we said, you can buy all of these, but let's just close it out and then we can chat about it afterwards.
Okay, fine.
Yeah.
There was a lot of run up there for us to...
Massive, yeah. But let's close it out by obviously one of our favourite, well, if not the favourite asset class here at Equity Mates, and that is equities. Equities are simply shares in company. And that's really much all there is to say for equities.
Yeah, look, we've done plenty of episodes on this, but equities are, a part ownership stake in a company.
Yeah. $109 trillion market globally if you were to take all the listed companies in the world and their market caps. Some of the major stock markets you would have heard of: the Australian Stock Exchange, New York Stock Exchange, the Nasdaq, the FTSE over in Europe, in London. There are 60 exchanges around the world, and the US makes up 56% of the global stock market value, which is no surprise there considering the companies that they have listed. So, one of our favorite asset classes, no doubt.
Yeah. And look, we have covered off some of the major ones. There's a heap more. We didn't touch on cryptocurrency. We didn't touch on art. We didn't touch on cars, wine, baseball cards, Pokemon cards. 2 Pokemon references
Memes.
in one episode. That's interesting, yeah. NFTs. All of these things capture value and are stores of value in many ways. You can sell it for something and you can be relatively confident with at least some of those asset classes. Art, you can be relatively confident that it will hold its value and you can sell it. There's a concept that you might not want me to introduce here, given you've already told me to pause on something else, but I'm going to try and introduce it. We'll see if you let me. If you think about all these asset classes, there's a question that Seth Klarman asks in his book, Margin of Safety, which has really stuck with me over my investing journey, that I think is worth putting in when we're talking about all these different asset classes.
Is this going to be beginner level?
Yeah. Are you investing or are you speculating? And with a lot of these asset classes, what you're doing is you're buying them with the hope that someone will pay more for them in the future. Like if you buy a piece of art, it's not like generating you any money while you own it. You buy it because you hope someone will pay more in the future. Or if you buy, some wine, I guess, same thing. You keep it in a cellar. It's not making you any money, and you hope someone pays more for it in the future. Compare that to like shares, where they're creating, while you own them, they're getting more valuable. The company's hiring people, working hard, all that stuff, blah, 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 making you money, paying you dividends. Or property, like if you buy property and you rent it out, you're earning rental income while you own it. And so for me, the way that I like to separate all these different asset classes in my head are assets that while you own them, they're productive and they're making you money. And then ones that you just own because you hope to sell it for more in the future. Are you investing or are you speculating?
Nice. So to continue with Ren's massive run-up when we were talking about equities, the most exciting...
No, property. We're talking about property.
Property. The most exciting part for us is that the share market, as we said at the start, gives you the ability to invest in all of these asset classes and create a portfolio. You don't have to go out and buy a solid gold nugget. You don't have to go out and buy a barrel of oil. You don't have to go out and buy a suitcase of US dollars. You don't have to knock on the door of the US government or the Australian government and ask for them to engage in a loan with you. All of these are available through the share market, which provides some pros and cons, a lot more pros than cons for us. And it's an awesome opportunity.
All right, well, talk to us. What are the pros?
So the pros, firstly, as we've just mentioned, is accessibility. You can access all of these assets through the stock market very easily from the comfort of your own home.
Yeah.
Around the world as well, both domestically and internationally.
And I think accessibility is 2 things. The first one is like the ease of buying. As you were saying, it's not like there's some arduous process of actually getting this stuff. It's you go into your brokerage account, put a few numbers in, or like a few letters in to get the stock ticker or the code, say how much you want to buy, hit buy. It's online shopping. Online shopping for assets, not bad. But it's also accessibility in terms of the minimum cost that you need to access it. So, bonds are normally traded in $50,000 parcel sizes. The property is obviously I don't know what the average house in Sydney or Melbourne is, but
1.1 in Sydney.
is
I
it
think, something like
Jeez,
that? Yeah.
must be nice. Same with a bunch of these other assets. If you wanted to actually buy the minimum quantity of gold from like a gold mint, you're probably talking thousands of dollars. The share market enables you to buy fractions of all of these things, so the cost to get involved is much lower. You can buy a few dollars worth of gold, or maybe a few $100s worth of gold, a few $100s worth of property, a few $100s worth of bonds, which is something that you couldn't do if you were actually trying to buy those things physically.
Yeah. Speaking of cost, Ren, another massive advantage of the share market and buying all these assets through the share market is actually the cost of buying. If you think about the costs associated with buying a house, you've got stamp duty, you've got to save up for the deposit, you've got to pay the agency fees, you've got to pay for marketing in Domain or wherever you want to, realestate.com. The cost associated with buying and selling is incredibly high compared to, say, a $5 brokerage fee that you'll pay to access property through the stock market. Equally, if you were to try and go out and buy a barrel of oil, literally, you'd probably have to, the costs associated with that, driving there, getting in the trailer, getting all the way over to Saudi Arabia or wherever the barrels of oil are going to be, it's going to cost you a fortune to do so. You can do it just by paying brokerage on the share market.
I'm sure there's some Australian oil.
There would be, but I'm trying to think of an expensive option. So the costs associated with buying these asset classes.
This people may remember in 2020 how oil went negative.
Yeah.
A lot of that was because traders were actually going to have to physically take possession of these oil barrels, and they're like, we don't want that, so we'll pay you to take it off our hands. Because you're right, it's an expensive thing to have to actually take possession of it and figure out what the hell to do with it.
Yeah. And finally, a big pro is liquidity. Now, this is a bit of a pardon the jargon if you've just started your investing journey, but liquidity really means the ease and speed at which you can turn something into cash and liquidate it is really where that term comes from. So if you were to think about, for example, trying to sell a house, if you needed to sell your house to get some cash within the next 3 hours, it's highly unlikely that you're going to be able to turn that around, because you have to put it on the market, do some inspections, then close it out with the lawyers and the banks. Then you're going to get a check from whoever's bought it off you. You need to cash the check, and finally you'll get the money into your account. Now, that's not going to take a matter of hours. It's going to take a matter of days. So you can't really get that cash quickly. Whereas the stock market, you can sell your shares or whatever asset class you've bought through the stock market within a matter of seconds and easily and quickly get access to your cash. So the stock market provides the ability to turn all these assets to and from cash with relative ease and speed, which is important when it comes to building portfolios and that sort of stuff. So another pro of buying asset classes through the stock market. And then one con for me, I'd be interested if you have any, Ren, but is ownership. So yes, you can buy a property through the stock market, for example, REITs, real estate investment trusts, but that doesn't mean that if you did so, you could then go and live in one of the houses that was part of the real estate investment trust.
True, yeah.
Whereas if you owned the home directly, not through the stock market, you actually have ownership of that house.
Yep.
So yes, you need to think about, for example, if you buy an ETF that gives you access to the gold price, you need to be careful about whether you actually have rights to some physical gold or whether you're actually just buying, the price of gold. So you just need to be careful about the ownership of the assets that you're buying and think about if that's important to you.
Yeah, and I think the other thing with ownership is decision making. Like if you are buying a real estate investment trust to get access to property and you're like, I think the market's at the top, we should sell. No one's listening to you. Yeah. I mean, you could sell your units, but it's not like, all you can do is buy and sell your holding. You don't have any like decision making control over the assets.
Yeah.
But yeah, I think, look, for me, it was a real revelation when I realized that basically you could build a whole diversified portfolio just through assets that were available to the everyday punter like you and I on the stock market. We own a little bit of crypto, some, who knows, percentage of the portfolio. I own some gold through the share market. I obviously own stocks. Not a lot of commodities outside of gold. Not a lot of property. No debt. So yeah, for the main one for me, I mean, I'm pretty aggressive with my investing at this stage. We're young enough to be.
Yeah.
Do you own any of these other assets in your portfolio?
Wine, cars, art, and furniture.
Yeah, must be nice.
No, I don't own any of them. Yes, crypto, obviously stocks. Yes, a bit of property and infrastructure. No government bonds. Yes, commodities, and yes, currency.
Actually, sorry, I do own some company debt.
Macquarie,
issued some hybrid notes, which are kind of like bonds, but are traded on the stock market. Let's not worry too much about them. Think of them as just bonds. So I do own some debt as well.
Nice. Well, that gives you a bit of access and exposure to the major asset classes that are investable both on the share market and off. We're going to spend the next episode discussing the key characteristics for some of these assets and why you might decide to buy them. They're all used for different reasons. And then we'll have a look at building a portfolio with these different asset types using the share market. So stick around for asset class, couple of episodes to go, but Ren will pick it up next week.
Sounds good.